Your journey into technical analysis begins with a single step. First, you must open your web browser and navigate to the TradingView website. It is a powerful tool, but it is also very easy to start using. The main page will greet you with a lot of information, but do not feel overwhelmed by it. All you need to do is find the search bar, which is usually located at the top of the page. This is your gateway to thousands of financial instruments. Think of a company you know or an index you have heard about. This will be the first symbol you explore on your path to understanding the markets. Now, let's select a symbol. In the search bar you just found, type the name of a stock or an index. For example, you could type Reliance for Reliance Industries or Nifty for the Nifty 50 index. As you type, a list of suggestions will appear below the search bar. This list helps you find the exact symbol you are looking for, often showing which exchange it trades on. Click on the correct one from the list. This action will load its price chart onto your screen. You are now looking at the historical price movements of your chosen asset. This is your canvas, where you will learn to see the stories the market tells. The chart that appears is the heart of TradingView. It might look complex at first, with its colored bars and moving lines, but it is simply a visual representation of price over time. Each point on the chart tells you what the price was at a specific moment. The horizontal axis at the bottom represents time, and the vertical axis on the right represents the price. Take a moment to just look at the chart. Move your mouse around. You will see how the price and date information changes as you hover over different parts of the chart. This initial exploration is crucial for building your comfort with the platform. Before moving on, familiarize yourself with the basic layout. On the left side of your screen, you will see a toolbar with various icons. These are your drawing tools, which we will discuss later. At the top, you will find options for changing the symbol, the time frame, and adding indicators. The main area is, of course, the chart itself. Take your time to click around and see what happens. The goal of this first step is not to understand everything at once, but to simply get comfortable with opening a chart and looking at it. Every expert was once a beginner, and this is your starting point. A chart can tell many different stories depending on the time frame you choose to view it in. The time frame determines the period that each candle or bar on your chart represents. You can change this easily. Look at the top left corner of your chart window. You will see a button that might say 1D for 1 day or 1H for 1 hour. Clicking this button reveals a drop-down menu with a wide selection of time frames. You can choose from seconds, minutes, hours, days, weeks, or even months. For a day trader, the 1-minute or 5-minute chart is essential. For a long-term investor, the daily or weekly chart provides a broader perspective. Let's try changing the time frame. Click on the time frame selector and choose 5M for the 5-minute chart. Notice how the chart changes instantly. You are now seeing a much more detailed, short-term view of the price action. Each candle represents 5 minutes of trading activity. Now switch to the 1D or daily chart. The view zooms out and each candle now represents an entire day of trading. Playing with different time frames is like using different lenses on a camera. Some show you the fine details up close, while others give you the bigger picture. Understanding which time frame to use is a key skill in trading. Now that you have your time frame set, let's add some tools to help us analyze the price. These are called indicators. Indicators are mathematical calculations based on price and/or volume, and they are plotted as lines or graphs on your chart. Two of the most popular indicators for beginners are the exponential moving average, or EMA, and the relative strength index, or RSI. To add them, find the indicators button at the top of your screen. Click on it, and a new window will pop up with a search bar. This is where you can find hundreds of available indicators to use. Let's add an EMA first. In the indicator search bar, type moving average exponential and click on it from the list. The indicator will immediately appear as a line on your price chart. Next, let's add the RSI. Go back to the indicators button, and this time, search for relative strength index. When you click on it, the RSI will appear in a new panel below your main price chart. The EMA helps to smooth out price action and identify the trend, while the RSI helps to identify overbought or oversold conditions. These tools add layers of information to your chart, helping you make more informed decisions. The left side toolbar is your box of crayons for technical analysis. It contains all the drawing tools you need to mark up your chart. The most fundamental of these is the trend line. A trend line helps you visualize the direction of the market's momentum. To draw one, click on the line icon near the top of the toolbar. Then, find 2 or more low points in an uptrend, or 2 or more high points in a downtrend. Click on the first point, drag your mouse to the second point, and click again. You have just drawn a trend line. This simple line can act as a dynamic level of support or resistance for the price. Next, let's draw static levels of support and resistance using the horizontal line tool. Support is a price level where buying interest is strong enough to overcome selling pressure, causing the price to bounce up. Resistance is the opposite. It's a level where selling pressure overcomes buying pressure, causing the price to turn down. Find the same line tool menu on the left toolbar, but this time select horizontal line. Find a significant low point on your chart where the price has bounced multiple times and click there to place a support line. Do the same for a significant high point to mark a resistance level. These lines create clear zones where you can expect price to react. Another powerful tool for identifying potential support and resistance levels is the Fibonacci retracement. This tool is based on the idea that markets will retrace a predictable portion of a move, after which they will continue in the original direction. To use it, find the Fib retracement tool in the third icon group down on the left toolbar. For an uptrend, click on a major swing low and drag your cursor to the most recent swing high. The tool will automatically draw a series of horizontal lines at key Fibonacci levels like 23.6%, 38.2%, and 61.8%. Traders watch these levels closely for potential turning points in the price. These drawing tools are not just for decoration, they are essential for creating a trading plan. By drawing trend lines, you define the trend. By marking horizontal support and resistance, you identify key price zones. By using Fibonacci retracement, you can anticipate where a pullback might end. Your chart starts to transform from a confusing series of bars into a map with clear landmarks. This map helps you navigate the market's movements. You are no longer guessing. You are analyzing the chart based on historical price behavior and established technical principles. With your chart marked up, it is time to learn how to read the live action. The price on your chart is displayed using candlesticks. Each candle tells a story about the battle between buyers and sellers within a specific time frame. A green or white candle means the price closed higher than it opened, showing that buyers were in control. A red or black candle means the price closed lower than it opened, indicating that sellers were dominant. The lines sticking out from the top and bottom of the candle's body are called wicks or shadows. They show the highest and lowest prices reached during that period. Watch how new candles form and how they react when they approach the lines you drew. Now look at the bottom of your chart. You should see a series of vertical bars, usually red and green. This is the volume indicator. Volume represents the total number of shares or contracts traded during a specific period. It is a measure of conviction. A price move accompanied by high volume is more significant than a move with low volume. Look for volume spikes. A large spike in volume when the price is breaking through a resistance level suggests strong buying pressure and a higher probability that the breakout is real. Conversely, a price move on low volume might be a false signal, lacking the power to continue. The key to mastering TradingView and technical analysis is consistent practice. You must put in the time to become fluent in the language of the charts. Make it a daily habit to open TradingView and analyze a few different symbols. Practice drawing your trend lines and marking your support and resistance zones. Use the Fibonacci tool on different price swings to see how often the market respects those levels. The more charts you analyze, the better you will become at recognizing patterns and potential trade setups. Repetition is the mother of skill, and in trading, this could not be more true. Finally, start creating a journal of your analysis. When you find an interesting chart setup, take a screenshot. Use a simple image editor to label the key elements, the trend line you drew, the support and resistance zones, the volume spike on a breakout, and the candle patterns you noticed. Write a short note explaining why you think it is a good setup. This process of screenshotting and labeling will force you to think critically about your analysis and will accelerate your learning curve dramatically. It creates a visual log of your progress and helps you learn from both your correct and incorrect assessments.